Hey guys, what's going on? I'm Edward Majok, the Profitable Traders Coach from the Profitable Traders YouTube channel. In this video, you learn how to identify key levels of structure like a pro, even if you're just a beginner. With that being said, 4 points that I consider when choosing key levels of structure. The first point is the key level of structure must be at a recently formed level of structure. The second point is the key level of structure must be at swing highs or swing lows. The third point is the key level of structure must be tested multiple times. The fourth point is the key level of structure must act as support and resistance in the past. With all these points being said, let me discuss them on the charts. This current pair is Aussie Yen. I have marked this level of structure as a key level of structure. Why is it so? It's because, first of all, this is the recently formed level of support in this case. And second, this level of structure has been tested multiple times. It was tested here as support, tested here as support. If we go to the left, it was tested here as resistance. So this is a strong level of structure. And I do it as a zone because these key levels of structure should be treated as zones, not as single lines. Also coming up here, this level of structure is a dynamic key level of structure because it was recently tested here as support, tested here as support, and if we go further to the left, it was tested here as resistance, tested here as resistance, tested here as support, tested here as support, and let's go further to the left. This key level of structure is tested here as resistance and tested here as support. This is a key level of structure that has been formed recently and it has been tested multiple times in the past. And also this key level of structure has acted as support and resistance. And every time a market came at this level, there was a massive reaction. When it came at this level, there was a reaction. When it came at this level, there was a reaction to the downside. When it came at this level, there was a reaction. So this is a key level of structure that has been tested multiple times, and this key level of structure has acted as support and resistance in the past, and this key level of structure is at a recently formed level of structure. This is a daily time frame. I had a trade here in September and it was a win, and I'm currently in this trade at this key level of structure. When you drop to a lower time frame like a 4-hour time frame, you can look for any simple price action pattern and enter the trade. And currently I'm in this trade because this is a key level of structure. I expect the market, if it comes back to this level of structure, this support level, at least there will be a push up testing the previous level of resistance. So in this case, I'm in this trade currently, most likely to hit my profits, but I will see next week whether this trade will be a win or a loss. The next level of structure is here. This key level of structure has been recently formed, so it was recently respected and tested here as support. And let's see, when we go to the left, this key level of structure was also tested here as support and it was tested here as resistance. So for that reason, this is a strong level of structure that has been tested multiple times, that has acted as support and resistance, and that has been recently respected. For that reason, I'm expecting this market, when it comes up to this level of structure, what I will do, I will go to a lower time frame like a 4-hour time frame or a 1-hour time frame and look for a reason to go to the downside. The next level of structure that I have drawn on this Aussie yen is here. Why is it a key level of structure? If you say it is at extreme swing highs, then you're correct. This is a swing high, this is a swing high, this is a swing high, and this is a swing high. It is at swing highs, and this level of structure has been tested multiple times, and also it has been respected recently. Now when this market came up here, this level of structure was respected and pushed the market to the downside. So this is a strong level of structure that when this market comes up here to this level, what I will do, I will look for a reason to go to the downside on a lower time frame. And if this market breaks above this key level of structure, what I will do is to wait for a pullback to this level of structure, then go to a lower time frame and expect the market to go to the upside. Now our next key level of structure is here. Now why do I call this a key level of structure? First of all, it is at extreme swing high, and also this swing high is recently formed. When we go further to the left, we'll likely find out that this level of structure was tested here as support, 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 and support. So this is a level of structure that is at swing high, that is at extreme swing high, that has been tested before multiple times, and that has been tested as support and resistance in the past. So this is a strong level of structure that if a market comes up at this level of structure, what I will do, I will expect this market to have a push down on a lower time frame. And if it breaks above this level of structure, what I will do is to wait for a market to come back to this level of structure, then I go to a lower time frame, then look for a reason to go to the upside. These levels of structure are so powerful. If you identify them on a higher time frame, then you trade them on a lower time frame, you will find them to be so profitable. Thank you guys for watching. You can check out more videos on my channel.
So this is a setup that we pinned in the Patreon, right? This is on GBP NZD. So let's break it down. So this is the setup that we're looking at. So when we look at key levels of market structure, even though this is a 15-minute time frame, you still need to look at what price action is doing, right? So you got an uptrend, right? You have higher lows in price action, and what we see here is that we have a channel forming, right? A channel we have higher. A channel we have this upslope and resistance and upslope and support. And what you want ultimately price to do is, again, you want to wait for the break and then a retest for the continuation. But you really want to, in terms of trading it, you really want to wait for price to either break or reject the level. And I'll show you what happened. So again, this is a multi-time frame analysis. That's a whole different, video I can make on that. But what you need to see is that we kind of had this rising wedge forming, which is typically a bearish pattern. We broke out, we retested it, and then we formed this uptrend. So after we broke out of this rising wedge, we came back to almost the apex of it, and we're now rejecting it. So this level right here was support, this level right here was support, this level right here was support. Then it flipped into resistance, then it flipped into resistance, then it flipped into resistance. And as we know, in the 15-minute time frame, it was also showing another channel that we also had as a key level of market structure. So again, we've been rejecting this upsloping support and resistance. It's not horizontal, but it's upsloping, right? So you have upsloping support, which is basically just an upwards trend. And then your target inevitably is this level of support or resistance that flipped into support. And that's where you would expect price to eventually go back down to in time. On top of that, you have bearish divergence, right? So you have lower highs in oscillators and confluence with higher highs in price action, which is just indicative of a reversal as it was here. You have lower highs and then lower highs and then higher highs in price action. And then you got a pretty big dump in price action. All right, so again, if we look at this channel that we had again, it's forming right here. We waited for the break of it, right? Price action fell down. We waited for the break. We waited for the retest and then the continuation. And boom, we also had another key level of support resistance. If we zoom out, this trend line right here was very key. We sent it in the Telegram with trade setup. So we had a support here, support here, support here. So price action was rejecting this level relatively strong every time price came down here. Buyers came in and stepped up and bid the price up. And it came here again, instant rejection. Then we have some consolidation. We broke down below this key level, right, of this 15-minute time frame channel. We broke it, retested, and then we headed back down. We broke it. We retested the other key level of support and resistance. We took a short. We headed right. It headed all the way back down, and then ultimately the profit-taking level was hit for about another 200 pip move, which is about 195 pips. So that's really what you want to look for in terms of market structure, because price action is it ultimately moves according to the sell orders and the buy orders, right? So if price action is stuck in a range, or if price action is trending upwards, what you typically see is that, like, say, for example, here, what we see right here is this level of resistance, right? So price action was resisting this level relatively strong, right? So you have resistance all throughout here, and then it ultimately ended up flipping into support short term. So price action was continuously selling all throughout here. I typically don't trade rangy markets like this. I wait for price to kind of break and retest and continue. But as we see, right, when you want to look for key levels of market structure to ultimately look for entries, you would either want to wait for some sort of bearish Japanese candlestick pattern like this to confirm that price action is rejecting a certain level before going short, kind of like we had this long-legged doji right here after hitting a key level of resistance, which basically shows that price action failed to break above the level. And then we got the reversal all the way back down. So these are the levels you want to look out for. So you can really watch out for horizontal and diagonal levels of market structure. I personally look at just patterns. Patterns tend to have diagonal levels of support and resistance. So, for example, a falling wedge, a rising wedge, a channel. These levels are very key, and they also kind of indicate how price action could eventually break and then retest and continue to the upside. So like here, we had a level of support, which was rejected multiple times. You had a double bottom reversal, and then you had the continuation ultimately. So you just really need to watch out for key levels, levels that where price action continuously rejects and confirms as